What is the picture of Starbucks after the most recent earnings report? They had a mixed result, missing on the one hand, but beating on the other. And honestly, shareholders that I've talked to still feel pretty good about the stock. The fact is that they think that this is an opportunity to accumulate at better prices. So I suppose the question is, after this earnings release and with how beaten up the share price still is there value here? Or is this something where we should be concerned about the future of Starbucks and maybe look into better opportunities? Well, let's take a look at the financials and talk it over. So, certainly the overall trend for revenue does seem to be upward, not tremendously so, and they have failed to beat the comparable quarter from last year. So, it's not a fantastic picture. I did hear that comparable store sales numbers were actually down for the most part, which another thing you don't really want to see. And with new stores potentially opening up, for revenue to still not be like overall growing in that environment, it's a little concerning. Now people are worried about China, and a lot of their growth is supposed to be coming from there in the coming years. So that's something to keep on your mind when you're looking into Starbucks. Free cash flow, likewise, is not necessarily climbing. It is sort of limited by how much they spend on opening new stores. Obviously, that's going to take a chunk out of what falls into the free cash flow category. So while they're still in the process of doing their sort of international expansion, I won't necessarily only look at the free cash flow. There's other metrics, of course, but same store sales being down, free cash flow not being like super impressive. These are just things to keep in the back of my mind. We'll take a look at some of the other financials and see how it all kind of fits together. All right, so on this, we have net cash, or in this case, debt of almost $22 billion, with the free cash flow being where it's at. It would take multiple years to, get this back to sort of a neutral net cash position. I wouldn't say that they're necessarily over levered by any means. Like, I think they can manage this level of net debt, but it is somewhat concerning to see that this number kind of remains pretty high compared to their free cash flow. Like, they would need a pretty big shovel, and if something changed for the worse suddenly, it could be pretty bad for them. And these last couple quarters haven't been amazing, so again, something to keep in mind. Their valuation ratios, such as price to earnings and price to free cash flow, are both in the low 20s, with an interesting divergence: price to operating cash flow closer to 13. So it comes back again to, I think, probably mostly the money that they're spending to expand and open new locations. I think if they slowed that down, or once they've sort of saturated the markets that they want to saturate for the most part, gotten into all the best corners around the world, then we might see that when more of that money hits the bottom line in the form of free cash flow, we might say, oh, all of a sudden, Starbucks looks cheap. Now, it would be great if they could do that while also increasing same-store sales. The same-store sales situation is a little bit troubling, but again, the consumers maybe are in a bit of a rough patch right now. We keep hearing about the weak consumer. After the dump the market took today, maybe the market is sort of anticipating a recession. So I wouldn't necessarily think that those times would be the best for Starbucks. However, I do think they're pretty likely to endure and then come back stronger in the next economic boom. So this isn't necessarily a doom and gloom situation, just some things to keep in mind. Certainly, I think that their price to operating cash flow is not overly demanding, and it could spell what we might be paying for future free cash flow. Analysts are slightly in favor of buying at today's prices. The forecasts out into the next 12 months are all at least a little bit higher than today's price, with some up over $100. I think $112 is it's rather ambitious for Starbucks, but if things really go well, they have a couple really, really strong quarters back to back, for example, sometime in the next year. Okay, I mean, maybe there's a big run up in the price. I could see it happening. It's not the most unbelievable thing in the universe. However, the analysts that are sort of closer to that $80 to $90 range are probably being a little bit more realistic based on what the recent results have shown. If you asked me, if we're into a period of weaker consumer for a little while here, especially, I don't think it's going to be a bull run necessarily the next 12 months for Starbucks. At these somewhat lower prices, they do yield an okay 3% in the dividend. Their buyback yield 1.28 gives you a fairly moderate shareholder yield of 4.27%. It's, as I've said before, not great, not terrible. It certainly, you could do a lot worse. And with a company that's got a pretty great brand here, I think, hey, that's probably better than what you get for a lot of other comparable companies, or at least pretty similar in the ballpark. So they're not necessarily lagging similar businesses in terms of what they give you in terms of returning capital to shareholders through buybacks and dividends. So they're not doing too bad there. And the payout ratio, again, could be deceptively high here because their actual operating cash flow seems like it's a lot higher than what their net income or their free cash flow reflects. And I think a lot of that is to do with a lot of the spending that is needed to, grow the business. And I think if they can get those costs down once either they finish the expansion, or if maybe strategically they're like, maybe business isn't so great and we should slow down on that for a while, I think you could see that number improve quite a lot in all reality. Now, regarding what you would have to do to justify today's valuation on Starbucks, they got to do pretty well. Okay. We've assumed that they will hit the projections for EPS, which I believe these are 2025's projections of $4.16 per share. We're only applying the 10% discount rate, which I think is a pretty decent, reasonable standard, because you can probably make close to that just investing in an ETF. So why would you want to do worse on an individual holding? And, growth stage for EPS of 12% a year for 10 years. I think that's pretty aggressive. I think there will probably be years where they do have growth that's in the low double digits. So call it 11, 12, 13%. But will they grow that number consistently? Or will they have some that are really bangers, 17, 18%, where there's others that are maybe a little less and average out? Hard to say. But yeah, they have to accomplish quite a lot. That's a pretty big escalation in their EPS. Now, granted, if we're talking about, hey, the expansion is where a lot of the spending's coming from, and once they've built out, if a lot of the spending sort of starts to get to a more reasonable level, and it does reflect on the bottom line, we could see definitely some strong growth for years and years, maybe even a full decade. You never know. Personally, I think that this isn't necessarily a cheap stock right now. It's not unreasonably priced, for sure. It's not out of line or anything. It's not overly expensive. But hey, is it the best deal you could possibly find in the market? Also, probably not. Let me know in the comments below if you have any Starbucks stock in your portfolio and how you're feeling about them after the most recent earnings and the recent price action. I would also like to ask that you like for the algorithm, subscribe to the channel for more, follow me on Twitter or X at Mr. Macho Mog on the Twitter or X platform, whatever you want to call it. Also, join Discord, link in the description. Consider becoming a member to support me directly. And also, catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live, link in the description. We have a live show where we do all kinds of fun stuff, engage you guys in real conversations. Take it easy, everyone.